What if I told you I spent hundreds of hours reading over 40 investing books, only to find half of what I learned working at a top investment bank was completely wrong? Can you really trust Wall Street, or is there a simpler, smarter way to build wealth? And what secrets could 40 books reveal that professional investors desperately try to keep hidden? Let's dive in. Investing seems simple. Buy low, sell high, watch your money multiply. Yet anyone who's tried realizes it's never that easy. Legendary investors like Warren Buffett and Peter Lynch dominated headlines with massive returns for decades. Today, you're bombarded with countless options: stocks, ETFs, cryptocurrencies, real estate, each claiming to be the fastest route to wealth. But most of us are just guessing, relying on tips, luck, or gut feelings. I was there too, chasing the latest trends, until I decided to stop relying on luck and instead devour every credible investing book I could find. This journey took me from Benjamin Graham's The Intelligent Investor, to Peter Lynch's One-Up on Wall Street, to Morgan Housel's The Psychology of Money. Over the next couple of minutes, I'm sharing exactly what these 40 books taught me, so you don't have to read them yourself. But let's start at the beginning. I used to think investing was all about complex financial models, insider knowledge, and timing the market perfectly. During my time learning finance, I felt like I had access to hidden truths, the secrets average investors would never understand. But the deeper I dove into these books, the clearer the contradictions became. I vividly remember a senior trader confidently saying, "Timing is everything," just after I'd read that time in the market beats timing the market. This contradiction sparked an internal rivalry: traditional Wall Street knowledge versus timeless investing wisdom. Was everything I'd learned about investing actually wrong? Could the truth really be found in books available to everyone? This tension set the stage for the biggest investing lesson I discovered. But first, let's unpack what shocked me most about these classic books. At the core of these 40 books, one thing became incredibly clear. Investing success isn't about complexity. It's about simplicity and consistency. Starting with Rich Dad, Poor Dad, I realized the foundation for wealth was simple: buy assets, avoid liabilities. Robert Kiyosaki taught me that each dollar could either work for you or vanish into expenses that drain your resources. Then, in The Intelligent Investor, Benjamin Graham revealed successful investing doesn't require genius-level IQ. He argued emotions, not market crashes, were an investor's biggest enemy. Yet Wall Street thrived on emotions: panic selling, greed, hype, all contradicting Graham's teachings. Next, Peter Lynch's One-Up on Wall Street proposed ordinary investors had a natural advantage over professionals, investing in what we already know. This felt revolutionary, yet Lynch had results to back it up. Was the secret to wealth really this simple, or was there something else I hadn't uncovered? Finally, Morgan Housel's The Psychology of Money taught me investing mastery isn't about numbers, it's about understanding human behavior. Our emotions and attitudes toward risk shape our investing success far more than market predictions. But then why do most investors still fail, despite knowing these truths? Absorbing these lessons completely transformed my investing philosophy. The immediate aftermath was powerful. I stopped chasing hot stocks and quit panicking during downturns. My newfound composure led directly to better financial results. Friends and coworkers noticed my calmness during market chaos and began asking questions. I'd finally understood how emotions sabotage wealth and no longer fell victim to fear or greed. Have you ever experienced a mindset shift from reading an investing book? Share your story below. But was this immediate success sustainable, or just beginner's luck? Throughout my reading journey, I also encountered some persistent investing myths. For example, one myth says, you need a ton of money to start investing. But books like The Psychology of Money and Rich Dad, Poor Dad consistently debunk this, showing how small, consistent contributions often yield massive results over time. Another myth is the belief that investing is inherently risky. However, as Benjamin Graham emphasized, risk primarily comes from ignorance or emotional reactions, not investing itself. Lastly, there's a myth that only professionals can beat the market. Yet Peter Lynch proved ordinary people routinely identify winning investments just by paying attention to everyday products and services. What's one investing myth you've believed or overcome? I'd love to hear your thoughts in the comments. Now, it wouldn't be fair to talk only about wins without admitting my own investing mistakes along the way. Early in my career, I chased trendy investments without understanding their real value, losing money because I ignored fundamentals. A key lesson from the intelligent investor. Another mistake was panic selling during market dips, precisely the emotional reaction Benjamin Graham warned about. That taught me how costly fear could be. Finally, I underestimated how important diversification truly was. By focusing too heavily on just a few stocks, I faced unnecessary risks, reinforcing a key lesson found in almost every investing book. How did I finally overcome these costly mistakes and turn things around? Let's see how those hard lessons paid off long term. Months later, the lessons from these books compounded further. My investments grew steadily, and stress around money virtually disappeared. These books taught me patience, consistency, and simplicity, virtues opposite to my former Wall Street habits. But these insights weren't just personal, they reflected broader industry shifts. Younger investors, now equipped with these lessons, started outperforming traditional analysts. The rise of ETFs, passive investing, and cryptocurrencies is a reflection of simplicity, transparency, and financial self-awareness. Today, even traditional financial institutions have embraced these philosophies, recommending low-cost index funds, something previously mocked by pros. But if investing has changed dramatically, what's coming next? Which investing book changed your perspective most? Drop it down in the comments. I always reply. If you enjoyed these insights from 40 investing books, there's a lot more waiting for you on Profit Path. On this channel, we simplify investing and personal finance, helping you take smarter steps toward wealth creation. Explore our playlist filled with actionable strategies, market analysis, and financial growth tips designed specifically for investors like you. Hit subscribe and turn on notifications. Don't miss out on powerful insights that could dramatically improve your financial future.